Where is buy side? Where are the inefficiencies in terms of a premium? We have this high to that low. Right away we have this inefficiency, we have this inefficiency, we have this inefficiency, and then the buy stops resting above here, and that's high probability draw on liquidity because watch, over here we have this. All of this is open. All of that right there is open. So once we start to trade higher, you want to look at how down closed candles should be supporting price advancing higher. We moved, bodies stayed within the context of that daily fair value gap. The market trades up, we have a down closed candle. Does the price come back down to it eventually? And does it support price going higher? The high of that candle comes in at, you're going to be looking up here. The high of that candle is 105.58. The low in this candle is 105.577. So did it hit that level there and reverse or show willingness to act like a trampoline and rally higher? Yes. Now we have these two down closed candles here. This is one consecutive order block. Why is it an order block? Because we are in the lower half of the range between that high and that low. So if we trade above it and come back down into it, it should support just like a trampoline. If it trades down to it, does it support a move higher? And do we see price moving higher towards a higher inefficiency, which would be here, and or buy stops? There's a small little short-term minor buy side liquidity pull here because we have a candle high, higher high, lower high. So that's a swing high. So there's going to be trailed stop losses right there. And that's usually a big mistake, especially when it's coupled with an inefficiency just to the left of it. And then you have the buy stops that will be resting over here. The market capitalizes on the order block here, moves higher. We have a small little gap between this candle and that candle. So there's your fair value gap. Trades down into it there. Does it have a willingness to trade higher? Yes. Consolidation, down closed candle. It moves outside of the the down closed candle. Does it trade back down into it? Yes. Does it act like a trampoline, send price higher? Yes. So we bridged this inefficiency. We patched over basically all the sell side with buy side. See the acceleration in price action right there? That's occurring because you have this. All of this sell side delivery. Remember I taught you yesterday. Sell side delivery is expansion or one directional move lower. Buy side delivery is expansion or one-sided upward, or buy side delivery or advancing expansion move higher in price. Just basically it's directionally driven. And it's offering buy side. It's offering it to the market. What do I mean by offering it? Well, if the market does want to gravitate to an old high or relatively equal highs, why is it going there? The algorithm's repricing to that level to offer the buy side. To who? The smart money. That's the way the system works. If you think like smart money, like I'm teaching you, you'll engage price that way. But most people, and I'm, I've been on the record for decades now, teaching and showcasing and proving that these things are absolutely here. But you'll still see a lot of people, and some of you probably listening still don't want to admit that, there is some kind of artificial intelligence that's running things, and it runs very efficient, but it's going to these buy stops in order to offer buy side to smart money. And they will what? They will offset distribute their long positions to willing buyers at a higher price. Where did they buy? Here, there, 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 there. This is institutional order flow entry drill.